Welcome to Laptop Radio. Today's topic is Security Token Outlook for 2021. We have Charles Kaufman with us. He is partner at Lexcuity PC. Hello, Charles.
Hi, Michelle.
Where are you?
I'm in Los Angeles.
Oh, awesome. And tell us about yourself.
I'm a securities lawyer, and I say that knowing that most people hope to get through their lives without ever having to contact a securities lawyer. But actually, we can be involved in some stuff that's fun and important, like getting companies financed and helping entrepreneurs get across the bridge to being able to finance their ideas.
Mhm.
And I've been at this for more than 20 years.
Mhm.
Before becoming a lawyer, I actually took a stab at Hollywood and spent a little time as a screenwriter. I was one of those writers who sells some work, but they don't actually get made into movies, except I wrote some kids' cartoon shows and things of that nature. But when I became a lawyer, I wasn't sure which area of law I wanted to specialize in. And I was surprised when I got pegged by the large law firm I joined. It was LA office of Morrison and Forster to be a securities lawyer. But I think the head of the department wisely understood that what we do is storytelling to a great deal. We get into the heart of our clients' businesses and ideas and find a way to tell their stories in a way that's compelling, but still meets all the regulatory requirements. And it can be a balancing act. But a lot of times people don't even know their own story. I mean, they understand they have an exciting idea and that it's going to make money, but they haven't really articulated that story the way that it needs to be told to investors.
Awesome. And this is interesting because lawyers are not known to be storytellers. They're usually known to be people that the business people push back because they basically prevent anything to be done. Lawyers hate business people and vice versa. And now you're telling me that lawyers could be storytellers or lawyers are storytellers. How could that be?
I did spend a stint in-house where I understood that my department was known as the Department of Business Prevention. But my approach has always been to try to help people, get from where they are to where they want to be. But unfortunately, they have to color within the lines. But to know where the lines are and to know what can and can't be done to get there.
So you're doing security tokens and using blockchain. When do you hear or heard of blockchain? And what is your story? I mean, everyone has a Bitcoin blockchain story. When do you know about blockchain or Bitcoin? And what was your first reaction when you got into it?
Well, my first reaction was, I would say 2017, maybe late 2016 was when I first started to hear about it. And of course, I'd heard about Bitcoin before then, but I started to hear that this was a way that people were raising financing and that there was a lot of excitement about not just Bitcoin, but a variety of different blockchain ideas that people felt could be worth financing. And I came from what I think is a lot of people's mindset that, oh, Bitcoin is this way of doing illicit transactions secretly, and it's a bad way, and it's conducive to money laundering, to having a better understanding of it. And my then partner, Jor Law, he's kind of a thought leader in the area. And he was very aggressive in wanting us to look into and understand blockchain technology. I first became really aware of it during the ICO boom, the initial coin offering. And so many of those ideas were so speculative and so many people lost money on the ICOs. And you could kind of see as it was happening that it was creating a bad rap for the blockchain and that it wasn't really the way to go. That, the people didn't have their idea off the ground. It was just a concept that they were raising huge amounts of money. They were paying themselves 25% of the money that came in. And it was inevitable that the SEC would get involved and crack down on it.
Yeah, and I thought it was really exciting because when you're raising money for startups to fuel innovation, I feel like startup founders aren't really helped by the government. I think in other countries, if you're founding a company, the government can subsidize you for innovation. But in US, they don't really do that. The only way to raise capital is on Sand Hill and Palo Alto, and they only basically invest in certain people that may look like them and certain gender. And during this whole movement, I was really excited and just really hopeful that this ethos of decentralization and this new way of raising capital could even things out and allow for innovation and help founders, regardless of how they look like, whether they're men or women, or whatnot. It allows people to participate and get excited about a movement. However, I also understand that there are certain ways that these could be abused because I think there's no mitigating factors of that because it's so new.
Mhm.
Being a securities lawyer in that space, how do you handle all the gray area?
Well, to start, I think that there is still a lot of that sort of economic democracy
Mhm,
possible. And a lot of the blockchain ideas started with people who had a kind of libertarian mindset or an idea of blowing past regulations. And if you talk to entrepreneurs, their biggest issue is not getting funding
mhm,
for their ideas. And yet, what you hear from Silicon Valley, where everything is kind of track record, oh, we have plenty of money. Everyone who wants financing is getting it.
mhm,
And I think that is that limited set of actors that you referred to.
mhm,
And I think crowdfunding for security tokens is global enough
mhm,
and open-minded enough that there is still an opportunity for someone to get out there and tell their story, to use a social network presence that they've built without having to go through traditional venture capital and investment banking circles
mhm.
and to get interest in investing.
And how's that different from utility token? I must have asked and talked about this a million times here, but as a
Yes.
reminder, what is security token versus utility tokens?
So the main difference is that a security token has investment value,
Mhm,
whereas a utility token is a blockchain asset, digital asset that functions either as a currency or as a coin,
mhm,
a means of exchange, a means of fueling a business model, but that people aren't buying for investment value.
mhm,
And slowly but surely, the SEC gave us some guidance and some criteria to look at to distinguish the two. And this is the gray area that you asked about before. We kind of know where the regulators are coming from, what their concerns are, and know what they were going to look at and address. But it took a long time. The SEC came up with a position a few years ago that digital assets were not unique or they weren't so different from what they'd been regulating for 80 years and
mhm,
said, we're not going to ask for new laws. We're not going to pass new regulations. You should know that what you're doing fits into our existing regulations. And here's how it works. And I
mhm,
think that was a bad approach. And I attended a conference recently where some SEC staff members who could speak off the record were admitting that this was a bad approach. That for the
yeah,
SEC to say, this isn't our bailiwick, we're going to regulate this thing, but we're not going to write any new rules for it. You're just going to have to fit into rules that were written in the days of radio, no offense, but when radio was the main means of communication and the only mass media were newspapers and radio, and they were going to make those rules fit for security tokens. So you're seeing really the cutting edge of this with the current state of it with the Ripple enforcement action, which is all about this idea of is it a security or is it a utility token? And Ripple's XLM, Ripple very much feels that it's a cryptocurrency and that it shouldn't be regulated as a security.
mhm,
And the SEC is looking all the way back to when it was first issued and said, well, when you started selling Ripple, you didn't even have a network. So people were really relying on you. That's the core of this difference between whether it's a security or a utility token and unrelated and unregulated cryptocurrency. Are you relying on management to make this thing valuable? Or is it something that's got its own life already on a network where people can trade in it and get value for it just
mhm,
for what it is? And SEC is saying, well, when you launch this thing, there was nothing except people's trust that your management was going to make it valuable. So it was a security.
mhm,
And with Ether, the SEC did come out and say it was a security when it started, but now because it's decentralized, has a life of its own, it's got value apart from whatever the Ether management does with it, that it's not a security. It's considered a utility token. It's treated like Bitcoin now.
mhm,
And just to take a step back for your listeners, it makes a huge difference because cryptocurrencies they're treated as things and they can be exchanged on an unregulated exchange, just like exchanging fiat currency, foreign exchange.
yeah.
Whereas if you're a security, you're under a much more regulated regime from the SEC in terms of how people can buy and sell it amongst each other after it's out there. and what kind of compliance burdens you have.
Yeah, it's kind of like stock, I guess.
It's exactly like stock if it's treated as a security.
Yeah. And the line sometimes is not clear because Ethereum from the beginning is probably developed by someone. But it's
Right.
considered.
There's this Howey test, which it started with an orange grove, whether interest in an orange grove were securities or not. And it's been applied to digital assets. So the main factors are whether when people are getting it, are they buying it for investment value? Are they depending on management? Is there already a network where this thing has value, or are they relying on
Yeah,
management
what's
to give it
so
value?
frustrating is the government is not making new laws to accommodate the innovation. They're using old laws to apply the innovation to, which has not been foreseen before. And it's just like the pandemic, during states of emergency, you would have to pay taxes and do a bunch of stuff, but there's no exceptions for the pandemic. If you violate the law and there's no exception for acts of God, then you're penalized for it. It's kind of like the innovation of Bitcoin and cryptocurrency. So they're expecting the cryptocurrencies to fit into their old system of law, and they're too lazy to actually think about all the elements that are different from our current system and then make law so that it makes sense. That's really frustrating. I wish they actually study the differences, know what we want because we wanted further innovation. Ask the US as a leader. I don't know whether we're a leader or not, but we need to do stuff like that. We just couldn't plug and play where it doesn't fit.
Yeah, like it or not, we are a leader because what security tokens and digital assets in general are so global. But as a US lawyer, we find that people doing global offerings, they come to a US lawyer because they know that if they meet our disclosure standards, they'll work anywhere in the world. But also, everyone still wants to tap the US capital markets.
Mhm.
If you're going to make it, people ultimately want to make it here.
What are the processes and things that you would think about if you want to issue a security token? Like, how would someone even start?
One of the ways to start is to think about your reason for tokenizing. And for many companies, it's just they want to sell conventional equity, just like common stock,
Mhm.
but they want to get on board with this technological revolution. And I think that people who invest in their companies will want to. So they just want to issue that stock in the form of a digital asset rather than a conventional stock certificate. And then there are other entrepreneurs that are using blockchain technology for their enterprise in an innovative way. And they want to sell an investment that gives people an ability to participate in that. I mean, we had a client early on that developed a game token, a coin that could be used in various games of various platforms to buy the equipment you need in role-playing games and the other features that you need. And then, but once you have them or earned them within your game, to be able to move them to another platform. And they wanted to create it as a utility token. So you can't raise capital if it's a utility token.
Mhm.
So the structure we developed for them was to create a tokenized security that's basically a revenue share from this innovative coin, which will exist in its own network and exist on these games. But then an investor could put money in and get a share of the revenue that's generated as that coin moves through its
Mhm.
commerce. And that model has been used a lot, and it's still being used by a lot of companies to separate the investment value from the pure utility token. And to give a more recent example, we have a client that has a very innovative idea related to the Internet of Things to recruit local computers and participants with mobile devices to participate in an IoT
Mhm.
network and to reward them using coins
Mhm.
on that network. And so that's not the coin that they're selling to investors. They're going to have a coin that represents an investment in that will
Mhm.
be sold to investors, and that will be a security token.
Okay.
And in terms of practical steps, it's to think about because investors will ask why a token,
Mhm.
why not just sell me a share of stock like you normally would, or why not a safe, so these simple agreements for future equity that are popular now. And make sure you have a reason for people to go token because it's still sort of experimental and adds expense and complexity. But if you do have a compelling story, then I think you maybe go to a marketer or a platform, one of the exchanges that would be likely to sell your
Mhm.
token to make sure that it's something they would be interested in handling.
Mhm.
And then also to talk to a securities lawyer about structuring. Also, frankly, a tax lawyer too, usually because these are global ideas, to understand where the money is going to flow, where should your business be located, how should it be structured. One of the nice things about digital assets is you can create unconventional types of interests. For example, there's an exchange, INX. It's located, I think, in Amsterdam. That's going to be an ATS in the US, and they're selling their own stock.
Mhm.
And their idea is they'll have security tokens trading on their exchange, and they're selling a security which will be a 40%, basically a revenue share, an adjusted cash flow share that they're going to be offering to investors. So to talk to the exchange side to make sure, or broker side to make sure that it'd be marketable, and then to talk to someone on the regulatory side to make sure you'll be able to structure the thing and make it work.
Yeah, awesome. Are there investors out there who invest in security token? Because people say that there's no liquidity for security tokens right now.
There are investors. A lot of them are private investors that are getting in early on the company in the hopes that there will be liquidity later
Mhm.
and the enterprise will be worth something. We have just like the first exchanges, and I know we've been talking about this for 2 or 3 years now, but we really do have the first ATSs, alternate trading systems, coming online as exchanges for security tokens. And probably the most prominent one is T0,
Mhm.
which started as an offshoot of Overstock, but they've acquired a lot of financial service companies as partners and developed strategic relationships. You could actually go on their site, and there are 3 security tokens now in secondary trading as tokens on the blockchain on T0. So the thing finally has some reality. It's a little bit meta or self-referential in
Mhm.
that the 2 things that T0 started trading were their own stock
Mhm.
and the securities of Overstock, their parent company. But they have added Aspen. I don't know if you remember, we've heard of Aspen, but they got a lot of press about 2 years ago as one of the first big digitized assets. It was the Aspen St. Regis Hotel. A part of the hotel ownership and development was
Mhm.
tokenized. And that's the third token that's now available for trading on T0. So that one has met the aftermarket promise, which was just a sort of a test case or quite speculative when they launched that 2 years ago. We're going to rapidly see more of them coming online. And some of these exchanges want to, like Coinbase, I don't think they're yet an ATS, but they want to handle both
Mhm.
cryptocurrencies and utility tokens and security tokens.
Mhm.
And then there are others like T0 that want to handle everything from novel security tokens that aren't public all the way up to public company digital securities.
The title of this is called Security Token Outlook for 2021. What is so special about 2021 besides the Bitcoin space?
There are a couple of things. Aside from the fact that we finally have these ATSs coming online, the SEC put out they called it a harmonization release in
Mhm.
November, and it took an unreasonable amount of time to actually become final, but it will finally become final on March 15th. And it's mostly a adjustment and revamping of the crowdfunding rules
Yeah.
and rationalization of some of the other private offering rules. But crowdfunding is the most often used method of raising capital using security tokens. And this is going to open the doors a bit more. I think one of the most exciting things about that's coming online on March 15th is Regulation CF, which is true crowdfunding, the ability to crowdfund to ordinary investors and sell them a little bit of an interest in your company. The ceiling on that is being raised from 1 million to $5 million. And that becomes, it's still launch money. It's not really expansion money or for a more mature business, but it's a lot more realistic that you could be in a seed stage of the company and the enterprise could get enough money to get to the next stage. Similarly, Regulation A plus, which is like a mini IPO,
Mhm.
that's going up from 50 million to 75 million, which will increase interest from investment bankers and again make it more realistic for people who really need a chunk of capital who are already at the stage where their business is earning revenue and growing. And the SEC also expanded what's called testing the waters, so that if someone is interested in possibly doing a security token offering, they
Mhm.
can selectively market it in advance and start getting advance interest and know that it's going to be worthwhile to go through the whole process and spend the money to actually do a security token offering. That's a big part of it. It's those new regulations coming online and those improvements. I don't want to get too far in the weeds, but there are a lot of other things that will make life easier for us as securities lawyers. But the other thing that's going on is we have regime change in Washington. And when that happens, there's always a new outlook. The SEC, I don't know if your listeners are, I'm sure many of them are very familiar with the way the SEC works, but some may not be. It's run by a commission of 5 commissioners, one of whom is the chairman, but it always has 3 members of the existing presidential party and 2 members of the other party. So the SEC itself is moving from uh, Republican control to Democratic control. And we've seen in the last few years an increasing number of dissents among that board for some of the actions that the SEC has taken. And I don't think, with our new chairman of the SEC, Gary Gensler, I don't think the pendulum is really going to swing to overregulation.
Mhm.
And I don't think it swung too far to deregulation under Chairman Clayton. But it's always an opportunity for taking a fresh look. And he comes from the Commodities Future Trading Commission, which has also had a big role in cryptocurrencies and blockchain assets, because the CFTC regulates futures in blockchain, in cryptocurrency, even though the cryptocurrencies themselves aren't regulated. Once you get into a future interest or a put or a call or any kind of derivative, it's under the CFTC. So I think the commission is going to be showing increased sophistication. And I think that there's going to be a willingness maybe to do some more rulemaking to treat these unique assets as unique as they are, rather
Mhm.
than trying to force them into the old paradigm.
So you mentioned a few regulations, and those could apply to shares as well. In terms of security tokens, which one of those regulations apply? Would they apply the same to security tokens as they do to stock?
They should. The SEC didn't really know enough about them, I guess, for the first couple of years, or had a lot of doubt about whether investor protections would be sufficient. And there's the whole idea of the way blockchains can fork, or other, as secure as they're supposed to be. There have been assets that have disappeared, and to really understand that there were adequate investor protections. So one thing that unfortunately I don't think is going to go away, because so much of blockchain is that it's decentralized and it gets away with intermediaries and it's automatic and instantaneous
Mhm.
in executing transactions. You still have to use some of this established SEC infrastructure or securities industry infrastructure, like a transfer agent. There has to be a transfer agent that basically blesses that all of the transfers are happening in a way that protects investors.
Mhm.
And but fortunately, the biggest transfer agent, computer shares, they're now able to handle blockchain assets. There are a couple that have grown up, like Core Connects or TransferX, that just handle blockchain assets. It's not going to have quite the stripped down simplicity and deregulated, decentralized activity that people might have envisioned, but I think we're getting to the point where at least it'll happen.
That's awesome. I remember computer share when we were issuing stock a long time ago. And it's kind of nice that they're adapting to these new innovations. So
Yes.
with security tokens sell, it usually involves communities and
Mhm.
how to market to these communities who qualify to invest in security tokens.
I think that's part of the appeal of this regulation CF and the new $5 million limit on that, is that this came out with the Jobs Act several years ago.
With security tokens, it involves communities and there is a limitation and it requires the investors to be qualified. Isn't that harder than just issuing stock?
Well, it is and it isn't, because when you issue stock and you really want to do it, democratically and be able to reach ordinary retail investors, you have to do an IPO or direct offering, something similar to that, which it's an expensive and time-consuming process, requires audited financial statements, and a lot of companies aren't ready for that at the initial stage. And I think that's where, for example, the regulation CF comes in, because it allows you to go to ordinary retail investors. You can go to your customer base. If you have a social network following, you can
Mhm,
go to them and offer them a chance to invest in your idea.
mhm,
And now it's up to $5 million. You do have to do it in a prescribed form,
mhm,
but the SEC doesn't review it. You just have to meet their requirements and go through a broker
mhm.
or a FINRA registered platform. But we've seen outside of high tech, CF used a lot by community enterprises that have like a strong community or social network following, like microbreweries, for example, at the $1 million level. You can go out and you're going to build a local brewery, and you can go to people locally who'd be interested in visiting. You can let them have a say in what kind of beer you're going to brew. And
Awesome.
that's just as an example of how you can use this exemption. And you're not limited to accredited investors. And that's the way private capital formation has been for many decades, is that you can only go to the high net worth people, wealthy people, people with high income, or corporations, institutions for early stage company investments. But these new regulations and the crowdfunding regulations let you go out to ordinary investors, and they can take a dip in the pool and they can participate. It's risky for a lot of these companies, but if an investor has less than $100,000 a year in income, they're limited to 2,000 in investments, or 5% of their income. So they can't get hurt too badly, and they can participate. They're not locked out.
Let me just paraphrase that. So,
Sure.
under Regulation CF, if I thought of a new idea, let's say I wanted to make pens that are rainbow color, and I have a community on YouTube, for example, of 500,000 people. And the community is just normal people, just like me and you and everyone who's listening. And they're not accredited. So say they make like 50,000 a year. Do you mean that the normal people could place $1,000 into the project in terms of investment?
Absolutely. Whereas in the early days, through Indiegogo or Kickstarter, you could ask those people for money, but you couldn't give them an investment in return. You could say, I'll give you a box of the pens, or we'll put your picture on the website. Or if it's a restaurant, we'll give you a seat with your table with your name on it. But now you can offer them an investment in the company. You could say on your Facebook page or on your website or anywhere, by the way, we're doing an offering where people who are interested in investing in our business will have a chance to do it. Go to this site.
Mhm,
And then if you are going for ordinary investors, the site is kind of regulated. It's going to be a broker managed site, and people will just look at offering materials that are in a certain format. But you can, by all means, leverage off of your social network following,
mhm.
early local customer base, and bring them in that way.
Do people do a hybrid of utility tokens and security tokens?
Generally not. They tend to instead create two tokens,
Okay.
where one is going to function as a utility, and then the investors will get another token that derives its value from that. And the reason is, even though the SEC has said you can evolve from a security token into a utility token, use it to raise capital today, and then tomorrow just have it be freely trading in the marketplace,
Mhm,
we don't have a clear line of when that changes.
mhm,
As I mentioned before, they said, well, that happened with Ether. It started as a security and became a utility token. But it's too great a risk. If you really want to take advantage of everything the blockchain has to offer and have a utility token that's infinitely tradable and fractionalizable and
mhm,
secure, and anyone can buy and sell it in a transparent marketplace, you want to launch it that way and not burden it with making it a capital raising vehicle and having to go through the securities regulation, because
mhm,
then every resale has to meet some exemption from the
mhm,
securities laws in order to work.
mhm. Is there anything else that you want to share that I have not asked you?
I would just encourage people to not think of regulation, that when blockchain moved from the free for all days of the ICO to the STO and greater regulation, not think of it as a death knell for the STO or something that makes it impossible. There is a way to get to what you want to do, especially if you have an innovative and creative idea. And you should just talk to people about how to structure it.
So where could people find you?
Well, my firm, Lexcuity.com, you can always go to our website. and find me at conferences also. And always happy to chat with people about their ideas and how they can be realized under the securities laws.
What really excites you about this case? You sound really excited somehow.
I am, because when I first got into securities law, really investing in new and exciting enterprises was limited to people that they already knew, or to the institutional investors, or someone who go through a broker. And it's just so much more democratized now. And there's so many more opportunities, both for investors not to be frozen out of investing in those opportunities, but for companies to bring in investors that and find them that are interested in them.
And what is one piece of advice that you would like to share with the community?
I would just say that it can be done. If you've got an innovative idea to use new technology and it's not being used out there, to not look at the obstacles, but to look at all of these new paths to find investors and to find stakeholders. We didn't talk about B companies, but that's corporations, but that's a whole other area where people are melding public benefit and profit in a new way. It's an exciting time. People should jump on board.
Awesome. Thank you, Charles.
You're welcome, Michelle.
Okay, bye bye.
Bye bye. Take care.